Folks, this is the fourth and last video of our 4-video series on sector analysis and price. What I did was in the first video was show you the relationship between the S&P 500 and 50-day moving average. S&P 500 versus the 50-day moving average. I explained how if S&P is trading above the 50-day moving average, it means markets are bullish. I gave you the right sectors to trade. In the second video, I explained what happens if the S&P 500 is trading at the moving average. In other words, it's trading at the same level as the moving average. I explained what sectors to trade, and now for the fourth and last video, I'm going to tell you what sectors to trade when the S&P 500 is in fact bearish, or when the S&P 500 is trading below the 50-day moving average. So the average would be right here like this, and this will be price. This will be the S&P 500. Index, price. Let me S&P here. Moving average, and this is price. All right? This is the 50-day MA, and this is price. So you have the moving average right here, and then you have price below it. If you have the moving average here, and price is above it, like this, that means you're looking at speculative stocks. Whenever price is above the 50-day moving average, you're looking at speculative stocks. But right now, price is below the 50-day moving average, okay? So you're looking at bearish. You're looking at a bearish market environment, and you're looking to see what sector you should be buying when that happens. And the answer to that question is very simple. The best thing you can possibly do when stocks are trading, when the S&P 500 is trading below the 50-day moving average, is avoid buying stocks. You should be looking at treasury bonds. Ticker symbol TLT, all right? That's a 30-year or 20-year long-term. Anything over 10 years is a long-term treasury bond. The correlation between 10-year, 20-year, and 30-year is about 95%. So the long bond, ticker TLT, it usually rallies when stocks are trading below the 50-day moving average. But I know some of you love stocks. Some of you don't understand fixed income. You don't want to trade bonds. So what sector do you trade? What sector rises during a bearish market cycle? And that sector is utilities, all right? Utilities. Utilities is the number one and the only sector that I would feel comfortable trading when the S&P is trading below the 50-day moving average, all right? Utilities. Now, to review, I gave you a whole bunch of different things to talk about today. First, I talked about the moving average. I talked about the simple moving average. I talked about the 50-day simple moving average. And I explained to you how if the S&P 500, the S&P 500 is the overall gauge of the stock market. I explained that the S&P 500 is trading above the 50-day moving average. You go long speculative sectors, technology, consumer discretionary, those are perfect. If the S&P is trading at the moving average, in other words, the moving average is, and price of the price of the S&P 500 and the moving average are crossing each other. They're in the same level or near the same level. That means you look at industrial stocks, consumer staples, and materials, basic materials. And if the S&P is trading below, if it's trading below the moving average, below the moving average, the 50-day simple moving average, then you would buy utilities, or you would stay in TLT, which is a fixed income. So again, just to give you a very, very quick, simple review. S&P is trading above the 50-day simple moving average. You buy consumer discretionary stocks, you buy tech stocks, and that's it. If the S&P is trading at the moving average, at the 50-day moving average, that means market is stagnant. That means there's not a lot of directional bias. That means you look at consumer staples, industrial, and basic materials. And finally, if the S&P is trading below the 50-day simple moving average, that means market is bearish. You want to run for the hills, trade the TLT, which is a fixed income. That's how you take advantage of flight to quality. Flight to quality means traders are flying away. They're fleeing into fixed income. Okay, they're not flying away. They're fleeing into fixed income. That's called flight to quality. They're panicking, they're selling stocks, and they're fleeing into fixed income. That's why fixed income bonds rise when stocks drop. If S&P is trading below the 50-day moving average, TLT is the best, one of the best things to be in. It's a long-term bond, but if you have to be in stocks, pick the utility sector. It's the only sector that rises during a very bearish market cycle. Next time when we talk about videos, I'm going to teach you how to go inside the sector and find the strongest or the weakest stock in that sector. So if you're looking at consumer discretionary, you could find the strongest consumer stocks. If you're looking at tech, you'll find the strongest tech stocks. If you're looking at utilities during a bearish market cycle, you will find the weakest utility stock. Hopefully all this makes sense. Once again, please use the simple 50-day moving average, and please use the S&P 500 as your overall gauge of the market. I hope you guys like these videos. If you do, please like them below. This is Roger Scott, and I'll talk to you soon.